Good morning and welcome to Entrepreneurs Hour, right here on WRFR 93.3 FM. Every week on Entrepreneurs Hour, we dive into stories of triumphs, challenges, and lessons learned, highlighting how local organizations and individuals are working together to foster a thriving business ecosystem right here in Knox County and beyond. Whether you're starting a business, growing one, or supporting the local entrepreneurial community, this show is exactly for you. Hi, everyone. My name is Chris Austin. I'm your host and president of Ardiah, proud sponsor of this show. Ardiah is located in Rockport, and we help small businesses and nonprofits with bookkeeping, large-scale accounting, payroll, payment solutions, and tax services. I'm also the president of the Rock Coast Entrepreneurs and a member of the NSBA Leadership Council, representing the Maine small business community on a local, state, and national level. I created the show to help entrepreneurs navigate the complexities of running a small business by providing a platform where entrepreneurs can share their journeys and highlight some amazing partners in our region, showcasing the impactful ways they're helping small businesses and entrepreneurs succeed. Let's learn, inspire, and support one another as we continue to build a stronger small business community together. Now, let's get started with today's show. Well, good morning. It is so glad to be here this morning with a good friend of mine, Mark O'Donnell from Camden National Bank. It's a rainy, sobby day, but I'll just say soggy, not sobby. Hopefully nobody's sobbing this morning, but it's a soggy day, and we're here to talk about hopefully it'll brighten your day or your morning and shed a little light about how to prepare for 2025. And reality is that 2025 is just a matter of a couple of weeks away. The holidays are here. I know I'm excited, and I bet you'll probably say that you're excited too.
I am excited. Yeah, and thanks, Chris. Again, my name is Mark. I work over at Camden National Bank, and I appreciate you having me on today.
Absolutely. So, I invited Mark on the show because he and we've known each other for quite a few years, but, we do a lot of work together because of, I would say is I trust Mark with my clients and as well as Camden National Bank. We're very fortunate. We have some great banks and institutions here locally, but it's very rare where you can also say, there's some great institutions, but also some great friends too. So Mark, appreciate you joining me today.
Yeah, thanks, Chris.
And like I said, today we're going to be talking about the top 10 checklist segment. In these segments that we're going to be doing is hopefully just be able to help you navigate the complexities sometimes of small business. So one of the things that I wanted to do with this show is not only have experts come onto the show, but also to support partners such as yourself and myself, be able to come on and be able to shed a little light and create more of an educational component to some of our shows. And so today, that's exactly what we're doing. So the first segment that we're going to dive right into is going to be about financial statements and books. And I would just say, for Mark and I, this is very relative to our worlds. I'm on the side of, so my team prepares financial statements and they do the bookkeeping for clients, but we'll dive into that more. But Mark, what's so important about, having this as like one of the top 10 reasons that businesses and organizations should really, really focus on their financial statements and books?
Yeah, Chris, that's a great question. And I think, for me, and I'm going to talk a little bit first from the lending side of the balance sheet, because that's really where most of my efforts are, focused for most of the time. But, I would say there's a couple different facets to your financials, one being your tax returns. Obviously those are pretty important, but there's also a component of that, which Chris is pretty, I think, familiar with. And those are your internal financials. And what I mean by that are, your balance sheet and your profit and loss. Typically, I don't work for QuickBooks, but QuickBooks, I think, is typically the methodology to, prepare information like that. And I'll tell you that if you're coming to an institution like Camden National Bank, or any bank for that matter, you're going to want to have something, that you've prepared internally, AKA a balance sheet, a profit and loss. You're going to want to have, we utilize a tool called a personal financial statement, which really, Chris, if I were putting it in your terms, would be like a personal balance sheet, it tells me a little bit about your personal financial picture, what your assets and your liabilities are, because we want to get a good feel for what you have to bring to the table. But for the most part, we're really focused on, let's use, again, my book consists mostly of, I would say, 1 to 4 unit rentals. So let's focus on that because it's an easy one. There's a lot of people in the area that want to purchase real estate and use it as a revenue stream. Let's say you're looking at a 4-unit, apartment building. I would want to see, 3 years worth of financials for that particular property, because I want to make sure that and I think you mentioned this in your bullet points, Chris, that it cash flows. And if you're looking at the property, you probably know what that means. But if you don't, it's a good idea to understand how we calculate it. We are looking at a metric called debt service coverage ratio. And really what that is your, and I'm using some terms here that maybe not everybody's familiar with, but EBITDA, which is earnings before interest, taxes, depreciation, and amortization. And that's all information that we pull off your tax return. And then we look at that in comparison to what the property brings in net operating income. And we want that debt service coverage ratio to be 1.2 times your EBITDA. So let's say, your debt service. So let's say your debt service on a property, and I'll just make it up, is $100,000. I mean, that would be a big loan. But if your debt service on a property is $100,000, I would want to make sure that after you pay everybody, after you pay all of your expenses, that you have $120,000 showing in NOI, net operating income, to cover that debt service. Because that tells me that after you've paid all your bills, you can cover the debt with Camden, and you've got a little cushion to work with as well. So I think, for me, that's why it's so important for you to bring and look at them too. I mean, that's information that, if you're looking down the road, like if a year from now, okay, I got to do this, maybe I'm going to need to borrow $100,000 to update this property. I want you to be prepared for that. And being prepared means having, conversations with people like Chris and conversations with your accountant to make sure that when you come to the table, I don't give you any surprises by saying, well, there's no revenue here for me to work with. So I think, I know that was a long-winded answer, but I think that's, those are some things, some metrics that we look at the bank that will tell us, the viability of the deal.
Yeah. For us, I would say that most established businesses, if they've been around 5+ years, they'll know the importance of doing that. They also have learned as well that using accounting software is where it's at. And they also realize that sometimes they are not bookkeepers. I will just tell you right now, as I've mentioned several times before, and my team will tell you, I'm not a bookkeeper. No, that is a different mindset for me, from how I think. But it's difficult, but it's something that if you have experience to be able to do that, it is something that's so important. And that's why, we stress the urgency of, if you're going to be borrowing, you need to have tight financials. And a Excel spreadsheet isn't going to cut the mustard. It's not. It's not going to tell the story, because anyone can create an Excel, but we all know if you've used Excel, it doesn't take very much to mess up the value of something, because you've keyed over, the formula. Again, it's complexity that you don't have to worry about, and making sure that you have your financials in order. Number one is that having your books current is going to help you with an efficient tax return. And as you mentioned before, and that's the next segment we're going to talk about, is going to be tax returns, is that if you're not well prepared, you're putting yourself on extension upon extension. And if you are been in business for a few years, that's time that possibly could be impacting your ability to be able to borrow, because usually you have to have 2 years of tax returns?
2 or 3 years.
2 to 3 years. And so if your books aren't in order and you haven't been able to timely do your taxes, it's crazy. It could definitely make some huge impacts for you. But also too is that I understand when you're a startup, like you're watching every single penny come in and out. It's almost like operating out of your checkbook. But I'll tell you, that's also a big mistake that a lot of new businesses is they consider, basically maintaining their books or having an understanding of where they are financially is from a check register. Well, number one is that most people don't use a check register anymore. They just look at their available balance because everything's on auto pay or the electronic payments are like, oh, I got some available money, I can do that. Well, if you don't know what your financial situation, and especially if you have payroll, that means that people are depending on you. And if you completely forgot that you have X, Y, and Z of expenses coming in at the same time, next thing you know, you bounce a payroll. Yeah, your employees are not going to be sticking around very long if they're not getting paid. So it's something that's really important. So as I mentioned, and I know you touched on it, let's talk a little bit about, basically just getting yourself organized for tax season. I would just say is that it's when we're talking about tax season, it's also making sure that you're current with paying your taxes. And a lot of, especially if you're doing your own payroll, a lot of businesses don't realize how important it is to be timely with your quarterlies, because those will add up quickly. So, and that's important, but also too is just, again, making sure that your taxes are telling the right story. And, I've always, when I put my banking hat on, and, from years, is that I always remember telling people, you're either two categories. You're either a saver, okay, or you're a grower. And in small business, and that means that in saving, that means that you're writing off every single possible deal because you don't want to pay taxes. Well, if you're in that boat and you go to see Mark O'Donnell over at Camden National, that means that probably that bottom line is going to look pretty poor. And then the growers is that if you want to borrow, you better be ready to pay some taxes. And I'd love to get your perspective on that.
No, and I'm glad you brought that up because that's something that I do run across more often than not. And I understand. I mean, here's what I'd say. I'm a W-2 earner, so I'm in a different boat than most folks are that come to see me. But I understand the concept of not wanting to pay taxes on the earnings that you make, but at the same time. Let me back up. That's why it's so important to have a good accountant, because they know the information that I do not. I do not know tax codes. I am not an accountant. I mean, I'm a relationship person, so and I'm not going to pretend to be an accountant. And I really legally can't give a small business owner advice on taxes and their tax returns and how they're doing things, from a business standpoint. It's just not in my wheelhouse. So that's why I think it is important to understand, if this is what you're going to report on your tax return, how that's going to impact, your banking relationship, and not necessarily your overall banking relationship, but from a lending standpoint. Because if you bring me a tax return that shows a loss of $100,000, it's going to be very difficult for me to give you money.
That's right.
I mean, very difficult.
Yeah.
And there are things that are naturally added back. Depreciation, depreciation and interest are really the two bigger ones, but depreciation really only comes into play if you've got, some hard assets, real estate, vehicles, equipment and things like that you can amortize over whatever the schedule happens to be. But, if you're a business that doesn't have a lot of, hard assets and you're showing a loss, it just can be very difficult. And that's something that I want people to know when they're not only looking at their own books, but if you, like, let's say, Chris, you found a business you wanted to buy, I'm assuming you'll have access to those returns. That's something that you want to take a look at just to see, okay, if I want to do something with this place or grow it, am I going to be able to go to a bank right now and get that done? Right. And tax returns are the tool that we use because that's really the only tool that we have.
Yeah. And the other side of it too is that a lot of these, especially in Maine, we're unique, we're the oldest state in the union. I bring that up from time to time, but, last week we talked about succession planning, and if you're planning on selling your business, especially somebody such as yourself, where there could be somebody that you may refer to say, hey, I know that you're looking for ownership of a small business. Here's a great opportunity. You're going to want to make sure that whoever that you're referring, or even for that, if you're representing that buyer, is that it is so important to have good, sound financials and good tax returns, because, again, you have to be able to tell the story that it's not a tax write-off, it's a growing business and it's profitable. And if you're writing off everything, sometimes it's not the right thing. But also something that we saw as a trend, as a tax team, I also am not a tax expert, but I have a great team that does all that. is that we were seeing a lot of people doing their own books. And just like I said before, I am not a bookkeeper. And I will tell you, when I was on my own and I didn't have a team around me, I did my bookkeeping one time a year. And that was right before I was doing my taxes. And we saw a lot of examples where people were doing that. And I don't know if it was malicious or not, but also too, we even had a few examples where we just said, we can't do your taxes. Because your financials, there is no way possible that you ran a business like that. And people call that cooking the books. And what's happening, there's a trend that's out there with CPAs, is that CPAs won't even touch your tax returns unless they've been professionally prepared, your financials. That means that you had somebody doing your bookkeeping all year long. They had checks and balances, they had a process, you had financials each and every single month to be able to tell that continued story. But if you come up and say, here's my financials, and you have nothing else to be able to show how your year went, and it's too hard, it's too, you look at it and you're like, wow, those look really, really good. But when you start looking at the numbers and how do they get to that, like, it sometimes could really create some red flags. So making sure that you have good financials is really important as well. So now
and do you mind if I
I
wanted to touch on that too, just because, not only are you, again, if you're looking at a business opportunity, not only are you presenting that to me and, kind of pitching that deal per se to me, I then in turn have to go to our credit team, and we are a publicly traded company that is designed to make earnings because we have shareholders. And if we don't pay those shareholders dividends, then, the company has problems. So, if you bring me a trash bag full of financial information or a handwritten, and these are things that I've seen, so and I'm not making fun of anybody. It's just, those are things that I cannot present with a straight face to the credit team because they just won't fly.
Yeah.
If we're going to provide you with, I'll make it up, $200,000 or $300,000, that's a lot of money.
Sure.
And that's our depositors' money. So that's Chris's money, my money, everybody else's money that we're lending out. And it's my job to be very careful with, who we give it to.
Absolutely. No, that's a great point. Thank you. All right. So far, we've talked about, number one, review financial statements in your books. We just talked about organize for tax season, but now we're going to talk a little bit about my world a little bit, and something I know that's very important to your customers too, is that one of the things that need to be on your list for 2025 to be prepared for it is evaluating some of your costs, and one of those being credit card processing fees. I will just tell you that being that is my wheelhouse, that is my world. While I was a banker, I transitioned into this because when I was looking on behalf of my clients, when I was doing some business banking, is that line item of bank fees usually is where this will sometimes roll up under. And when you look into it and you're like, well, how much are you paying? So you find this big number, this big nugget, and sometimes it's a significant number, especially if 90% of your business comes from credit card transactions. It is really, really important to know how much you're paying. And that's easier said than done, because when I started getting into this as a banker, I was like, well, first of all, how do you get your statements? No one knew how to get their statements. And honestly, it's by design. The credit card processing companies don't really want you to look at your statements because that's a gateway to someone like myself that comes in and says, oh, I can save you money. But also, too, it's like, okay, well, so everyone, it's like I hate saying it, but we're going to talk about insurance too. It's very similar to insurance, is the necessary evil of doing business. I hate putting it that way, but paying credit card fees is part of the business. Now, there are ways to offset it, and we can talk about that another day, but just a matter of 20 basis points. Having that type of savings could mean thousands of dollars per month if you're a large volume person, or $1,000 per year, thousands and thousands of dollars for a small business. And you're like, if I could save that money, I could put that money into something else to make myself more profitable. Well, number one is, how do you read those statements? Good luck, because some of them like to have things what they call clear and simple statements. clear and simple statements basically does the bare minimum that they are required to do, and that is basically show your volume, how much you paid, and credit card fees. All right, and also a deposit schedule to kind of that way you can reconcile your deposits. The rest is up to you to be able to figure out, and good luck. And it's one of those things that understanding how to read that, sometimes you just need someone to give you, well, what we call a quote in the industry. Because what they're going to do is they're going to do a valuation for you of how much you're paying. They should be breaking it out for you to be able to show where you can make some movements to save money. And that is so important to be able to do. And that's, we offer that as a free consultation at Ardiah. But, it's so important to understand how much you're paying, where you can you save it, but also to the education of how you accept payments can really make a really big impact. And for you, Mark, when I talk about credit card processing fees, I'm sure that you probably hear that from some of your clients that are accepting credit cards, but why should small businesses pay attention to that, do you think? And then also, why should businesses look to accept payments? Like, what's a clear reason why you would suggest a customer accept payments?
I mean, I think to answer your first question from a why should you look at that, and again, I'm not speaking out of turn, but I'm not an expert in credit card processing, but I know if it were my company and you're doing, let's just make it up, a couple $1 million a year in sales, anything that is 2 to 3% of your revenue for the year is something I would want to look at. If you're paying somebody $100,000 to process your credit cards, and again, making that number up, whatever that number might be, it's something I'd want to have some idea of what goes into it. And I will be perfectly frank with Chris. I have looked at some of these statements, and I consider myself somewhat intelligent, but I can't make much sense out of them. Mm-hmm. So that's why it's good to have, partners like Ardiah to kind of help me navigate that, because it is a question that, again, like you said, 95% of payments are processed, I'm assuming, by credit card or some form of electronic payment, which comes with some sort of fee associated with it. And I don't know much about it. So I think that's why it's important to have somebody like you that can help them decipher that. Because I think for the most part, people are grabbing some online processor, I don't have to say all the names, you know them all, and they just start taking cards the next day. They don't do a whole lot of research. Maybe it's got a pretty terminal, maybe it's got like a cool website, or it's got a good marketing plan or marketing strategy. I mean, so I definitely think if it were my company and I was buying it, I would want to know exactly what I'm paying for.
Yeah, absolutely. And what I would just buyer beware out there is that everyone will promise you that they can save money. But understanding that, like, for example, right now it's repricing season. And that usually happens from like October to like January, February. And so somebody can come in and say, hey, Mark, I can save you money. And you're like, great, I can do that. But the question is, well, when are you going to reprice me and put my rates back up? Yep. Because people that have been through this before, they know that, yes, they'll probably see a temporary, but if they don't have a really good relationship with someone, next thing you know, they start jacking up your rates. And, there's a reason why some of these processors that we don't do business with, because their goal is to be extremely profitable. For us, it's all about balance. It's a balance of profitability for my company, but savings for the customer as well. And keeping that relationship and advocacy, and that's why it's so important to be able to do that. So the next thing that I want to talk about is audit, payroll, and employee benefits. So this is number 4 on the list. So audit, payroll, employee benefits. It's one of those things, just like, let's just take a step back. So during COVID, you were really, really busy with PPP loans.
Yeah, we were.
And I think that you probably learned really quickly those customers that you were helping that had payroll companies that they were working with, or the ones that were writing a check out of their checkbook. So can you share a little bit about that, that experience, why it's so important to...
Now you're talking from like a reporting standpoint, is that?
Yeah.
Well, I mean, I just think that, and it kind of goes back to what you hit on a moment ago. I mean, your payroll costs, cost of goods sold is typically your biggest expense, your biggest line item, but your next biggest line item is going to be your employee costs. And I hate to even say those 3 letters, PPP, because they were a very difficult time, more so for the small businesses that this show is for, but for us, and having access to good, clean information is very important. And I mean, again, will you leverage it like that again in the future? I hope not. But I mean, having somebody that can provide that information quickly certainly helped folks, I think, substantially, especially during that painful time. But, again, I think having somebody report on that is important because, again, it's something that as a financial institution, we don't provide that level of service. And it's something that, again, if it were my business and it's 25% of my overall costs or my overall revenue, I'd want to have a pretty good line of sight into it and understand what's going on there.
Mm-hmm. Yeah, and it's, like right now, it's so important for people to understand that doing payroll is, it's not just cutting a check. It's having the record keeping and also be able to, a lot of like the payroll services that we offer, call it escrow. I'm just going to use that, is that basically every payroll, your payroll taxes and, in your employee contributions to their benefits and what have you, all of that information is being, that money is being scraped and put aside, and it's building by each and every single payroll that's being processed, and then those quarterlies that you have to, those 990s that you're filing. Like if you're writing checks, you're probably not doing that, and you're probably waiting until the end of the year, and that's where a lot of people get into tax problems because of payroll taxes. They start adding up quickly. And if you're not putting that money aside, and and it's okay if you're going to have your own payroll. Like a lot of people will utilize, like QuickBooks for their payroll. Those companies that you're utilizing that don't necessarily escrow, it's so important to know and have that structure where you go to Mark and you say, you know what, Mark, I would love to have maybe another checking account that I can just set aside my taxes, so that way I'm scraping that, I'm putting it to the side, and that way I can on time file my return, but also to pay my taxes on time. Because if not, it will, like I said before, is going to bite. But also to, that functionality, why I think it's so important, why this is, in that top 5, is that it's also a really, really good time to be able to understand and be able to position yourself for things that are happening in Maine right now. And I called it a dumpster fire. I'm sorry, but that's how I feel. But this this Maine new policy, this paid family leave, if you don't understand it, you're going to get yourself in a lot of trouble really quickly. So if you are new to what that program is, starting in January, 0.5% of your employees' wages have to be put aside, and they are contributing to this paid medical leave. Okay, the employer, if you're less than 15, you're basically matching it dollar for dollar for your entire payroll. If you're more than 15, guess what? You're paying 1%. And if you're not getting yourself set up in a way to be able, like yesterday, we went through this exercise for all of our clients. So our clients, by the end of today, will be all ready for the first payroll run, and all that's all set up. So that will scrape that side money and put it to the side, even though it's going to drive us all crazy. It's just another tax, it seems like, but we're putting it to the side, and that will go directly to. That will be an automatic payment, just like my quarterlies, just all those, those contributions to Social Security, Medicare, and all that fun stuff. So this is what's going to be, this is going to help do that. But if I was navigating that on my own, first of all right, so how do I take it? Do I have my employees take it on a, pay it on a quarterly basis? Do they pay it by, it is way too complex, and having a payroll system is so important to be able to do that. But also to, listen, I act as an employee, you're an employee. It is so important to make sure that, okay, so this is paid medical leave. In 2026 or 2025, I know that my people, my team, and myself cannot utilize those benefits. We're not going to be able to utilize those benefits for short-term. Basically, it's almost like short-term disability almost. It's supplemental income for when things happen. Next thing you know, it's, you just don't know. Like, next thing you know, you have all these different policies and all this different coverages, and now you're doubling up because, like, for my team, I pay for short-term, long-term, and death benefit. I do that as an employee benefit. Now if I'm doing this paid family leave, and I'm now paying it twice. So now as a business owner, I need to make sure that am I putting too much coverage? But also too, I got to care about my employees. I got to make sure that I have the right benefits, because if I don't have the right benefits and someone else, my competitor, comes by and matches their income, gives them better benefits, they're going to be gone. I hope they're loyal, but they're going to be gone really, really quickly. So ensuring that your people have the right benefits is really, really important. But also too, the cost standpoint, benefits, that is a big expense. And so if you could save money by shopping around and checking out different vendors to be able to help you navigate that, is really, really important.
I was going to hit too on the because you mentioned the employees specifically. I think that's why, at least in my opinion, it's so important. I mean, if you think about any of our businesses, they're all reliant on the employees and how well the employees are doing, and they're the ones that are really driving everything for you. If you're not properly setting up their payroll run, they can get into trouble at the end of the year from a tax standpoint, and that could be big problems, for them.
Right.
I mean, you got to think about these individuals. It's already hard enough to live in the state of Maine and pay taxes and pay the increasing housing costs around here. So I mean, we're all stretched, I think, leaner than we have been in the past, and I think it's very important that if your employee says, hey, this is how I intend to file, these are my dependents, you got to make sure things are being done properly. So at the end of the year, they're not left holding the bag on some crazy tax liability that they weren't planning for.
Absolutely. So we're going to transition to number 5 on the list, and that is insurance policies. So, it's so important to review your coverages. And we talked a little bit about your perspective as a banker. So why is it so important for people to review their coverages, especially if they're in borrowing mode?
Yeah, I mean, I think I'll tell you that, insurance is another huge expense line item on people's tax returns and internal financials. And again, it depends on what kind of business you're running. If you're running a business that isn't very equipment or real estate intensive, then your insurance liabilities can be lower. I mean, because typically you'd have some sort of umbrella policy that would cover various things. But if you've got a business that is let's use a landscaper, for example. You've got a piece of real estate, where you got people working with equipment that, can be dangerous. I mean, those are things that you need to look at.
Yeah.
You've got 10, 12 guys driving vehicles all over the place. You got to know what kind of people are driving those things. I mean, you got to make sure you're protected, that people on the road are protected. I mean, and those are things that, again, in my opinion, you should be looking at pretty closely. And we have, and again, I'm not plugging anybody on here, but there are a lot of great agents in the area that can look at the policies you have in place. Let's hope everybody has policies. If you're going to borrow money from us, you're going to have insurance.
Right.
Like if you're buying a building from me, for example, or from Camden National, we're going to want a policy that will cover at the very least, the loan balance. So if you put 25% into $1 million property, we're going to need something that covers at least $750,000. So if, God forbid, the thing burns to the ground, the bank could be whole, the customer could be whole.
Yeah.
So, I think insurance, again, I'm not an insurance agent, so I can't speak that freely about it, but I know some really good ones in the area that, are very consultative and can give you some good, at least in my opinion, good sound advice on it.
Yeah, I mean, I think as a consumer, I've gone to a dealership, I've gotten myself an auto loan, I gave them a copy of my insurance record, and then 2 months later, I get this, strange phone call or a letter in the mail that says force place insurance if you don't show that coverage. And, that's something that could be really, really expensive.
Crazy expensive.
If the bank has to step in and provide insurance because they have a vested interest in the property they're financing. But also too, it's imagine in that terrible situation where you lapsed in your coverage and somebody gets hurt. That could be end of business for you. Maybe it's a piece of equipment that you're financing. Your banker's not going to be very happy if that piece of machinery that you're paying a loan on is no longer around because it's been a total loss, and that's right, you didn't have coverage on it.
Mm-hmm.
That's going to be a difficult conversation to have with your banker for sure. But also too, it's workers' comp. I think you talked a little bit about the employee side of things. I would just say is that people have heard that term audit, workers' comp audit, and that usually spells expensive, because if you are fluctuating in staff, maybe you're growing, maybe you have some seasonality to this, and when they look and they go back and they see, well, you told us that you're going to have 3 employees, and so we base your policy off of X, and then you have 10 employees. Let me just tell you, that's going to be a nugget that you don't want to see. And so there's a lot of great options that are out there that they like pay. Like a lot of people use Memic here, and it's because of that pay to pay. So it's based off of your payroll that you run, and that's why it's so important again to have good payroll records. It's great to have a great insurance company helping you with your workers' comp, but also too making sure that you have the right plan, especially if you have a lot of if you see a lot of changes in your future, you should really talk to someone about your workers' comp for sure. So great, those are awesome things to be able to talk about when we're talking about insurance. Again, the necessary
evils, man.
Yeah, we gotta love it, right? All right, the next one is something that you and we're goal-oriented people. Maybe a little bit too much. My team will probably tell you that, that I'm a little intense when it comes to setting some pretty big goals. But update your strategic goal. Why is that so important? That's number 6 on our list. Why is that so important?
Yeah. Well, then I'll tell you. I mean, one glaring reason why it's so important is that if you come to us and you want to borrow money, for example, to purchase business, if you haven't got some pro forma financials, and what I mean by that, that's a fancy word for projections. I'm going to want to see, what are your plans? Like, if you're going to buy this place and I'm going to give you $500,000 to buy it, I want to understand how you're going to pay me back. And that's very important. And I think I don't know as though, and again, this is not a shot against anybody, but I don't know if sometimes people are thinking that far down the road. Like, I mean, a piece of property looks great right now. 10 years from now, it might need $75,000 or $100,000 worth of work. Is there enough cash flow in this property to support that? Or are you in a position to do those upgrades on your own if it's not?
Right.
And we're going to bake all that stuff in anyway. I mean, when we look at a property and we look at the revenue of the property and we look at the bottom line, quite often we will put a CapEx reserve in there that says, okay, that's great that it's doing this, but you're going to have to spend $100,000 over the next 10 years on this property. We're going to want to see that in an account, and that's going to go against the debt service coverage as well. So I think that's why it's important to be thinking about a plan, a strategic plan. And again, I'm using rentals as a model because that's what I do mostly in my book. But if you're buying a restaurant, you're going to want to do 5 years worth of projections. You can figure out, okay, if food goes up by this much, labor goes up by this much, everything goes up by this much, am I going to be able to make money? And if I'm going to make money, how am I going to do it?
Right.
You're probably not going to be able to do the same thing forever and just continue to make tons of money. I mean, things change, Are you going to do takeout? Are you going to change? There's a million things you can do. And again, I'm not a restaurateur, so I can't pretend to give advice there, but it's just something I'm going to want to look at when you come to the table. Because when you come to the table for money, I do take it very seriously because again, it's customer and shareholder money that I'm not playing with. That I'm lending out and I'm shaking their hands, and it's very important, that piece of it.
Yeah. I had a guest speaker to the Rock Coast when we used to be the Rock Coast Networkers. I had a gentleman, his name was Jay Lebeck. He was a business coach. He came in and he was talking about how, everyone, especially when you start off, everyone is going upwards. So and that's why he was saying that down the road, most people start failing is when they get, 5 to 10 years down the road, because what they do is that the first 5 to 10 years, they are in a trajectory of just upwards. Everything is up because it's a new business, it's a new model, and you started off making 0 and you're moving up. And so you see that upwards trajectory, but also too, that's the excitement. You're like, yes, I'm growing, everything's awesome. And people come in, wow, Mark, look at all the people that you have employed, and you're like, yeah, you should see my payroll. But people see that in that excitement. Your family sees that. You start branding. Next thing you know, you're wearing your logos all over the place. You're doing all these things. And all of a sudden you start to plateau a little bit, which is not necessarily saying that your business is a failure, but you start losing that edge. And so what happens is that people that don't have these strategic plans and that 5-year plan, like you were talking about before, they're not going to be able to make the necessary adjustments that keep that trajectory of that continued growth, that high that people love to have when they're seeing that great success. They're not going to be able to sustain that without having strategic goals, but also too the importance of being able to reflect on your past, be able to look at your past financials and be able to make those adjustments. And next thing you know, you're instead of plateauing, you're actually still growing. And that's why it's so important to have those strategic goals. So that was that was number 6. Number 7, I wouldn't say that this is probably something that you and I would necessarily say is our strong suit because we're not into inventory and asset management. Yeah. But I think that we have some great people that we surround ourselves that we talk a little bit about that. But the importance of checking physical inventory counts, also just making sure that that you're also, there could be some inventory that you have to get rid of. That could be some depreciation possibly that you're impacting there. But also too, it's just it's making sure that you have the right level of assets too, and being able to make sure that that you're finding the right ways to be able to utilize those assets as well.
And a lot of the companies that, and again, I'll use like a C store or a like a general store type of an operation. I know often some of the larger suppliers, AG, places like that, have people in-house that can help with that. I mean, if you're giving them, cost of goods is expensive. Right. If you're doing $1 million in sales and it costs $700,000 to buy all those things that you're selling for $1 million, AG's making most of that money. They'll give you services for free typically that might help you with some of that inventory management. And it might look at some of your hot items, cold items, stuff that's getting wasted. So I think, make sure that you're looking to the people that you're giving your money to, your hard-earned money, and quite often they can help you with situations like that, or help you get access to that information that you're looking for to help you. Because again, I'm not an inventory management person. It's not my job. My job is to sell money and to collect payments and make interest for the bank. But I mean, if you're going to do that, you want to make sure that you're getting your best bang for your buck from some of these vendors that you're using.
Yeah. And some of these things that also, when you talk about asset management, but it also, let's talk about the landscaper that's out there. You are depreciating some equipment, looking at that schedule and say, all right, so eventually that's going to run out. But also too, you have to assess all of your assets to make sure that they are going to be in working order your next season. So this is where it's really important to have this conversation with your banker to be able to see maybe it's the right time. And with consulting your CPA saying, you should really look at doing X, Y, and Z for this benefit. Go see your banker for this. And it's really, really important to have that relationship because it could be a new lease, it could be new financing of equipment, it could be maybe taking some of your assets and buying something. So you probably see that all the time in your world too, right?
Oh, absolutely. It's one of the things, and it's typically, well, this is a little late in the year, but November timeframe, October, November, people will come in and say, hey, I met with my CPA. I think maybe I should look at, finance a couple pieces of equipment. And again, I'm not an accountant, so I can't speak very clearly to this, but I know there are, some tax codes out there that can help with, buying vehicles and equipment and things like that. So I do think, again, that's why it's so important to have a partner, an accountant specifically as a partner who can help you navigate that landscape. Because again, there are tax codes out there that none of us have probably ever heard of and wouldn't if we didn't have an accountant.
That's why we pay them big money, right?
Yeah.
So number 8, assess pricing and revenue streams. This is something that, we've already talked about. We talked about credit card processing fees, but also too, it could be the pricing of your products and services and knowing what your value is. If you're, I have a lot of retail businesses and restaurants that I, work with. And many of those, it's been years since they've made an adjustment. But what we've noticed, especially in the last several years, the cost to do business has greatly increased. And if you have not made an adjustment to your pricing, that's not good. That's not good at all because you're less profitable. And when you're talking to your banker and they see, well, why is your net income dramatically being reduced? And that's probably something that you probably see,
Yeah.
right?
And I think here's what I'd say, and I'll use the restaurant industry specifically. I've had clients that, again, these are clients that, in my opinion, are doing their research. There are clients who will, take a screenshot of somebody's menu over the last 5 years, and they'll look at the pricing. Has that business increased their pricing? Yeah, they have.
Mm-hmm.
Are they still, if you look across the harbor, are they still busy every night? Well, yeah, they are. Well, then maybe that's the right level of increase. And again, these are all tiny little pivots that you can make, but I do think that, again, that's maybe why you have an accountant, because I think an accountant has a better understanding of the industry as a whole from a financial standpoint, because they're doing books for all sorts of restaurants and whatever your field happens to be in the area. And I think they can give you insight into, or if you go out to eat, how much does a hamburger cost at, this place versus mine? Am I $2 under? And if I am, maybe that's not the right thing. If, again, I know we're down into the weeds here, but I think it is important, especially if you are a restaurant. Those are the things that you're selling, and those are the things that you're making money off. So, I think it's important to, and me as a consumer, am I going to notice if it goes up 50 cents? Probably not.
Right. Yeah.
And am I going to understand it if it goes up 50 cents? Yeah. Because I want to go out to eat, because I don't want to clean up. So to me, you know what I mean? That's just how it is.
They said that it was almost relative to what it's costing you to be able to feed your family at home, that it's almost the same exact cost to go out to eat. Well, before it used to be like, going out to eat, that's an expense compared to, something that you're doing at home. It's significantly more expensive. It's not really that different anymore. But also, too, it's that, just getting into the last part of this segment, is the revenue streams. I would just tell you is that looking at, like I did this for my business, we saw that one of our segments, one of our services that we were offering had been losing money for a long period of time. Is it really a valued added service? Is it something that really, am I undercharging? Or is it just not a service that people want or need? So I found that people looking to, they don't really need those services. So we got rid of that. But then we brought in tax to replace it. So we went through the exercise. We found a better revenue stream, but also something that's relative to my customers and what their needs are, and being able to balance that, which is really good. So the next, just because of time, let's go right into the next number 9, which is evaluate vendor and service costs. So, I would just say is that service costs is something we've talked about a little bit about some of the different things that are out there, but why is that so important?
Well, yeah, and I think, it's a nice it's a nice tie-in with everything that we've talked about, because again, your vendor costs, cost of goods sold, I know I keep harping on that, but that's a big component of it. If you're a C store and you're doing a couple $1 million in sales, might cost you 1.5 million, in your cost of goods, for those items that you're going to be selling. I would want to have a real clear line of sight as to what's going on in that bucket, because that's a big expense. That's a huge driver of, because then after that brings you down to your next level, and then you get everything else coming out there, and that goes right down to your bottom line. So, I think having a really good idea and having a great partnership with your vendors too, I think is important.
Right.
You shouldn't just cut them a check every month and hope that they're providing you the best level of service and price. I think it's your duty almost to compare.
Right.
There are many vendors in the area that can help you get a clear understanding of what's going on out there. So I think that's why I would harp on taking a look at your cost of goods sold, just to make sure that you're spending your money wisely.
Yeah. Another way to be able to evaluate your vendor and their service costs is that, that old saying is that don't put all your eggs in one basket. I would just say is that that's wrong. That mindset is a long time ago. That should have been just removed from people's mindsets, because diversity, it can be costly if you're like spreading out everywhere. It's really hard to manage. But if you bring all your services to, let's say, Camden National Bank, the more you're doing with, and same thing happens for Ardiah, the more business that you do with me, the deeper the discounts that I'm going to give to you, just because I know that if I offer you all of these services, number one, it's sticky. That means that you're probably going to stay with me. It builds loyalty, but also, two, what's in it for me? That's what humans do.
Mm-hmm.
It's what's in it for me. Well, what's in for me is that I have one point of contact for these 5 different services. And because I do all 5 of those things, I am getting a deeper discount than it would be for me to go out there on my own and go to individual places to be able to negotiate that one place. And relationship goes a long way. So I know that's really important to you as well as a banker.
Do you mind if I speak to that really quickly? Because
Yes.
I think this is something that I did want to hit on. Like you were saying, I mean, that depth and relationship is very important to Camden as well. And really it comes to, I like to talk about like both sides of the balance sheet, I think is the best way to look at it. I've focused a lot on lending, but I know that, we have some very competitive deposit products as well. And when we have that full relationship, and what I mean by that is not only do we have, your company's exposure being your debt, but if we have your company's deposits, that can help us price things better, because again, I know people think that banks have this pile of money out back that they just lend out. I mean, we buy a lot of our money, and we buy our money at a certain rate called the Federal Home Loan Bank of Boston. And, it's all public information. It's out there for you to look at. But, we're buying overnight money. I'll make it up at 5%. We sell it at 8%. There's our spread. I know that sounds like probably a lot to people, 3%. But, I mean, we're paying dividends. That's a huge chunk of it. We're paying all of our infrastructure costs. We're paying technology. We're paying insurance. We have loan loss reserves. I mean, there's a million things that go into that 3%. So there's a lot of things to think about from a banking standpoint that even I don't think about. So I think having that depth in relationship, being the deposits and the loans, is very important to Camden National Bank at the moment.
Yeah, absolutely. Great points. So our final number 10 is plan for technology and process improvements. Being that I used to have a technology side of our business, technology, what is it? I heard a slogan from an area, technology happens. We all know what that's replacing,
Yep.
But it is so important to identify your systems. Like, we have a great relationship with Rockbound Computer. I know that they're going to be monitoring our services and our systems and be able to tell us, okay, this computer needs to have an upgrade. This is not, and it's going to be disruption to our services if we aren't keeping up with our systems. And that could be the same thing for your restaurant, your bar. If you don't have the right point of sale for your customers, if there's nothing worse than when you go in and you say credit card machine down, but if you keep on going to that same place over and over and that machine is constantly down, that person, because they could be going somewhere else because they don't have cash on them, possibly. But also too is that, having, process improvements too, for me, it's just, again, going back to that trajectory where you want to continue to grow is so important to continue to evolve as a business, to make sure the process that you have in place is adapting to the culture, it's adapting to the employee needs, it's employed to the customer needs, you're deploying these things the right way. So I'd like to get your perspective on that for a couple of minutes here.
I mean, I think it's interesting that you mentioned that, because here's what I'll tell you. I went to Portland yesterday, for a business meeting, and there were a couple establishments that I went to during the day where they didn't even take cash. It just wasn't an option. So to me, do I understand it? Yes, because we're moving as a society towards this sort of cashless system. But at the same time, think of how reliant those businesses are on their technology. I mean, if that technology goes down, then you make no money. You know what I mean? So I mean, I don't necessarily agree with that strategy at this time. But again, I'm an older demographic probably than some of the folks that were in there, so that's something to think about too. But I do think the further we get away from me handing Chris a $10 bill for my cup of coffee or whatever it might be, the more you need to look at that technology component to ensure that if something goes on with your system, what's step B? Like, what do you do then? Right. Who do you call? How do you take money? Because if you got a restaurant full of people and all of a sudden you can't take their money, what are you going to do about it? And I would want to know what my contingency plan was for sure.
Absolutely. Mark, we're going to go ahead and just review what we talked about today. Yep. So the first one was review financial statements and books. Number 2, organize for tax season. Number 3, evaluate credit card processing fees. Number 4 was audit payroll, employee benefits. Number 5 was review insurance policies. Update strategic goals was number 6. Number 7 was inventory and asset management. 8 was assess pricing and revenue streams. Number 9 was evaluate vendor and service costs. And number 10 that we just wrapped up was plan for technology and process improvement. So that is a pretty heavy checklist, but it's something that's really, really important. We talked about all the reasons why. Mark, I just want to say thank you so much for coming on as being a phenomenal subject matter expert. You're a great banker, and I appreciate everything that you do for our mutual clients, but also for what Camden National does. But I just want to, basically just give a final closing. So you can reach me at Ardiah. You can visit us on our website, www.ardiah.com. You can see all of our services. A lot of these things that we talk about today is we do free consultation. And I think, Mark, if you want to go ahead and just give a quick shout out about how people can reach out to you.
Yeah. And like Chris said, I'm a commercial banking officer out of the Rockland office at 300 Main Street for Camden National Bank. You can always reach me. My name is Mark O'Donnell, and it's O'Donnell, and you can reach me at modonnell@camdennational.bank, or feel free to give me a call at 207-706-6202, and I am always available to help. And it's not only commercial clients, but I've worked at the bank for a while, so I could certainly put you in touch with, if it's not my area of expertise, I can put you in touch with somebody who is an expert in that subject matter.
Yeah, that's awesome. Well, thank you, everyone. This is, I hope, one of many education segments that we're going to be doing. These shows are really, really important. We're going to balance that. It's also our last business show for the year. Next week, we may come on the air and just have a little bit of a different, and maybe have some younger co-hosts that will be joining me. But I would just say happy holidays to our listeners, to our viewers on YouTube, to our streamers. Thank you so much for listening to 93.3 WRFR. This is a great little station. I'm just, they need support. They need sponsors. I would say it's a great opportunity to be able to support things like this show and so many other great productions this station produces. Mark, happy holidays to you and your family. And we'll see everyone soon. Thank you.